Alright, hope everyone's having a really great day. So, one thing I wanted to discuss real quick is I really want to talk about channels for a minute, because I really think that channels, they're probably the single most important topic in trading, because when you really think about it, everything is a channel. The market's always on a channel, and I think it's a mistake to try and separate a trading range from a channel. And what I mean by that is a trading range is a channel. It's a horizontal channel. It's just I think Monday was kind of a good example. Here we go. It's just a flat channel. It's you can draw two lines, here and here, or maybe down here. Doesn't matter. So one thing just to kind of something I've been thinking a lot about is the market cycle. You get a breakout, a channel, and then a channel evolves to a trading range, and then the trading range evolves to a breakout. So I think one of the issues with we ask ourselves, is the market in a trend or a trading range? And I know Al talks a lot about that. I think one of the issues behind that is when Al says, I think it's in a trading range, he's still considering the fact that it might be a channel. So one thing to think about is asking yourself, take this day, asking yourself at the start, are we in a trend? Are we in a strong trend? So bar 2, strong trend? Maybe. We need more information. So by here we can probably conclude, okay, probably not going to be in a strong trend. We'll probably be in some sort of trading range. Well, instead of that, we should say we'll probably, instead of saying we're in a trading range, say, gee, well, we may be in some sort of channel. The question is, how strong is the channel or how weak is the channel? So, why think that way? Well, arguably by here, we had a bear breakout, pullback, and arguably the start of the channel. We went above this lower high. It seems minor, but it's the start of it's the open of the day, first couple bars in the day, so it's more, I think, important than it's important. We went above this lower high, so theoretically, if bears shorted, put their stop above, they got stopped out. So now we should be thinking, okay, the market might be in a trading range or a bull channel. So in other words, the market may be in a bull channel or a flat channel, aka a trading range. And the reason why it's important to still think about the market being in a channel is this. Look right here. We have a low, we have a high, we have a higher low, a higher high, and a higher low. Well, at first glance, this looks like a trading range. It does. And the issue with saying, oh, it's just a trading range is, well, you trade a trading range and a channel differently. I know I just said they're the same thing. What I mean by that is, in a weak channel, for instance, we have a low, high, higher, low, higher, high, so we may be in a bull channel. If we think we might be in a bull channel, we want to consider possibly swing trading the longs and scalping the shorts. So, when we get to here, we may think, okay, maybe we're in a bull channel. So therefore, I want to look to buy either a 50% pullback or below. In other words, I want to buy in the bottom thirds. The bottom thirds would be right here. This would be the bottom third. Somewhere in this area, the bottom third of the prior bull leg. So we had a bull leg up, and we pulled back to around a little below 50%. So it's important to remember that, because you want to think about the shorts. If it's a trading range, you want to sell in the upper third and buy in the bottom third. Well, here's the issue with that. If it's a slight bull channel, you want to sell in the upper 1/3, not in the upper 2/3. So, for example, you might say, well, here's a bear leg. It's very weak. Since it might be a bull channel, there's a significant risk that we go above this high. Well, you don't want to sell in the middle or the upper third because it might be a bull channel and you might get the bull breakout. Here it's pretty obvious it's not a strong, it's very weak, a lot of trading range price action. Where I'm mainly getting at is a day like today. I think it's really hard. Now, I have trouble with it here and there, actually. It's hard to recognize a broad channel because it looks so much like a trading range. And I think the issue with that is, instead of asking, is it a trading range, ask yourself, is it a broad channel? The only question is how broad. So when we see this, when we get to 9:30, ask yourself, okay, is this a strong trend that's going to lead to some sort of measured move down and a strong trend day? Probably not. Okay, so it's probably a channel. Is it going to be a tight channel or a broad channel? The more broad, the more it'll act like a trading range. Well, by the way, this is high 4. You went down and up, so that's the first push up, down, up. That's the high 2. We got a bear breakout, another push up, followed by another. So 2 pushes up here and here. So here, here, breakout, here was a push up, and then here. Anyways, strong bull breakout. And as you can see, we fell below the close. We fell below yesterday's high, yesterday's close. We fell below this stop entry. So if it's a trading range, we will go above important resistance. And here was one of them. It was subtle, but we did not go above it, which was very important. So, I would say this. If price would have gone above this lower high, I think it would have been, you can make the argument that price may be in some sort of trading range. It may not be a bear channel. However, this is very important. By somewhere in here, let's say this far, you may be thinking, okay, we're probably going to be in a channel. If we go above this high, we may be in a trading range or a bull channel, leading to a possible bull breakout. Well, so look what happened. Look what happened here. Well, trading range, broad channel, same thing. We may be channeling down. Weak bulls bought this double bottom here and here, and they got trapped and they gave up here and here. So why is it an issue? The reason why I'm saying to consider the possibility of the bear channel is number 1 right here. If it's a possible bear channel, you want to focus more on shorting than buying, obviously. However, the issue is this right here. In a trading range, you want to make sure you're buying in the below, at or below 50%. Well, if it's a bear channel, you want to try and buy even lower. The reason why is traders will sell right around here. They'll sell in the upper area. In other words, as this light's going down, you have to be thinking about, I know I'm drawing a lot of lines, so here's the issue. Let's say you buy here and you don't scale in. Well, where's your stop? If you're likely, it's not a 50% trade if you bought there. So let's say you bought in here and put your stop here and put a target here. Well, that's not a 60% trade. So you still have to buy even lower. And the issue with that is, well, let me back up for a minute. If you know it's not a 60%, that you can't get one-to-one buying here after this bull rally because it's possibly a bear channel, say you buy 67%. So in other words, You do this little trick. Yeah. So here's a 60. Let's say you bought right there and put your stop 1 tick below. Well, there's still an issue of probability on that. The reason why, it's very minimum. Your reward compared your reward compared to the risk is very minimum, and the reason I say that is if it's a bear channel, we may get this. So we may easily fall below this. So here's my point. Let's say you use a wider stop. Okay, well, I know this would work. Let's say you don't scale in. You bought here, and this was your actual risk all the way down to here. Here's 1 times your actual reward. It's going to be very, very high in what could be a bull channel. Well, what I say earlier, bears will sell 50% and above. So they're going to start selling here, and they're going to be happy to sell up here. They're going to be thrilled to. Why? Because they will sell a 67% pullback, put their stop up here, and bet on the new low of the day. It's crucial if you're in a channel, as broad as it may be, you want to scalp. However, you can swing trade a bear channel if you're shorting. It's much more difficult to swing trade a bear channel to swing longs in a bear channel. Why? Obvious. Well, this price is obviously coming down. So all I'm saying is this. Think in terms of, are we in a strong breakout? And if we're not, then say, okay, are we in a strong or weak channel? So by here, by this bar, you can say, okay, we're not in a strong channel. So it's not a tight channel because it's not a breakout on a higher time frame. So it's a weak channel. The next question is, okay, are we making higher lows, higher highs? Are we clearly making higher lows and higher highs? Are we clearly making lower highs and lower lows? Or are we making both and it's more of a trading range? If you can do that, you will give yourself, you'll be more aware of this possibility. How do trends reverse? Well, when you think about it, one way trends reverse is, say, in this case right here, we're going up, we start to go sideways, we start to settle, making subtle lower highs and lower lows, and then we start selling off in a tight channel. Another way is you just get a strong bear breakout. Well, more often than not, it's the subtle. You get real subtle lower highs and lower lows, and you just keep selling off. Let's find another example. Here's a good one right here. So bear breakout, probably leads second leg down. Ask yourself, are we in number one, are we in a bear trend? Probably not. So are we in a weak channel or a strong channel? Well, it's probably a weak channel. aka trading range. Well, here we went clearly above a lower high. We're back to the open of the day. It's either going to be a trading range or a bull channel, or a bull trend, if you will. Well, strong move up, clear stop below. We pull back and make a higher low. We went to a new high. So at this point, we may be in a bull channel. So it's more important to look to buy in the middle, the bottom 2/3 of the prior leg. That simply means look to buy somewhere in the middle, these lows. Clearly, bulls are buying there, and the bottom 2/3. Look right there. That's around 60%. Well, so what about the arguments of lower highs and lower lows? Well, that's true. We have low, lower low, lower high. We're starting to get a lot of sideways bars. And if you look right here, you You just have to compare. I mean, obviously, you're not always in a true channel that's slanted. All I'm saying is, on certain days, looking at channels, viewing the market as a broad channel can help more than a trading range. Other days it won't. Here's a tight channel, better to do nothing. And you can see right here, strong bear breakout below. Even if you said, okay, we're now in a clear, just tight trading range, it's not up, it's not down. Sure, that works too. Why? Here's the low of the trading range. We clearly broke below it, got bad follow through, started going up, so look to buy. Here's a good example. This is exactly what I'm talking about. Strong bar 1 and bar 2, deep pullback. So probably not, we might be in a bear trend, you can rule it out, but probably not a strong bear trend. Has a lot of trading range characteristics. So because of that, we may be in a weak channel. What do weak channels do? They sell off and they get deep pullbacks to the upper, to the middle and upper third. So look at this leg right here. We sold all the way down. Well, prior bear leg, traders will look to sell at least from here and above. Traders sold well above 67% and they put their stop up here. Look what happened. We sold off, made a new low. Well, look what happened here. We went higher in this pullback, but did not get above this leg. So a bear could sell, stop, move their stop to here as it turned down, move their stop to here as it turned down, put their stop up here as it turned down. Well, that's important because in a trading range, you can sometimes look to buy somewhere below down here. Where I'm getting at is, yes, obviously, if you buy in the bottom third of the channel and sell in the bottom third of the top of the channel, you'll be fine. Either way you look at it, the most dangerous area is the middle ground. It's especially dangerous for bulls in this case because it's a bear channel. It's very broad though, so it's pretty much a trading range. So, but here's where this helps you. Being aware that we're possibly in a bear channel, so we're more of a bear channel, a broad bear channel than just a flat trading range, tells you that we may have for the bulls, very deep pullbacks. So if you're aware of this, you may look to buy all the way down here, maybe even a point from the low. Well, if you know that, look to buy all the way down here, knowing that price is probably going to rally very close to here because it did it over here. Changes up your math a little bit. For example, this is a good example right here. This low is 11.50. This low is 11.25. This is very important, I think, when price, because, well, let's think about it. We have a high at 11.30 at 22.50. This high at 13.40 went to 22.25. So price, I think it's very important that the bears were able to protect their stops, and here's why. As long as we're making lower highs and lower lows, we're in a bear trend. So, as a bull, we're trading up, trading up, trading up. Bulls are going to get very nervous when price hesitates at this prior high. Why? Because of this. Whenever you're in a channel, there's always the risk of a new low. So, think about the weak traders. Weak traders go, gee, wow, what a huge, very strong trend up, and a high one buy. I'm going to buy above. Well, what are the other traders saying? They're saying, gee, weak closes, I'm going to look to get out. This close was 20.75. 20.75 is this high. This high was 20.75. Boom. What happened here? Traders got out at break even on this close, and we sold off, and we sold off, and we sold off. So, what did the bears think? The battle's over. Who's going to get a lower high and who's not? Well, the issue now becomes we may sell all the way to the low. So what's a weak trader going to do? They're going to put their stop down here. They're going to get stopped out right where everybody buys. And we rally up. So But you know, with that said, I don't want to contradict myself either, because I said on the other day, when price goes sideways, yes, that's trading range behavior. Trading range and broad channels are the same thing. They're just sloped. You know, it's just the degree if you think about it. Well, you know, if you think about it, what do weak channels have? Take a bear channel. What do weak bear channels have? They have bad follow through. Bear breakout below, bad follow through. Bear breakout, bad follow through. Bear breakout, bull bar. Bear breakout, weak follow through. Big tails. Another bear bar, weak follow through. A new low, weak follow through. Bull breakout, bad follow through. Bull breakout, bad follow through. You know, consecutive strong bull bars. Look at the bar. The bull bars look better than the bear bars. You know, you get strong bull bars going up. That all happens in a trading range. It's the same thing. If you know, look at Al's material when he talks about pressure of the market, or you know, trading range bars. Well, you get bad signal bars, huge vacuum bars that have no follow through. You get a stop entry with a weak entry bar, stop entry, weak entry bar, weak stop entry. You know, you get breakouts that just pause, they go sideways, deep pullbacks. The characteristics of a trading range and a channel and a weak channel are the same thing. So just something to think about. Like, you know, to review the day real quick. Well, what was the key? The key feature today, I think, was this. First 6 bars of the day. The reason I say that is I think that was a good sign that whatever trend the bears could get would be very weak. It would have a lot of disappointment. So when we sell off, you know, the bears got 3 bear bars, bad follow through, you know, tails on bottom, huge bull breakout, but until there's a breakout above a high, it's probably going to still be a trading range. Great bull breakout, we went sideways, no surprise, and the bears gave up. Bulls gave up, bears sell for quick scalps, and what happens at the bottom? Same thing. The weak bears who miss this, they go, gee, wow, I gotta sell, get long. Smart bulls, they're buying to get long, and then we rally up. So, key feature was really these bars. This was very important as well. It's subtle, but I think it's extremely important we did not go above the 9 o'clock high. And what else? This is also important. 10-10 low was 97 even. So if you bought the low of 57 even, excuse me, this high was 57 even, so it could not go one tick above. It touched it, but did not go above, so it's still kind of a gap when you think about it. And obviously they could have scalped out here. I still consider that important though. So, now what happened here? Well, let's say you sold this low and you rode it all the way down. You rode it here, you pulled back all the way up here, and you pulled back all the way down. You just made 5 points, maybe a little less, in 1 bar. You made 4 points. It's a gift. Weak channel, it's only, you know, weak channels always look like they're going to reverse and you're going to get a strong breakout such as here, and it doesn't, you know. So bulls are going to take profits. We're also at the February high. It's top of the trading range. And also, this is kind of important as well. 49, this high, usually when you get a clear sell climax at the, you know, towards the end of a move, first target is to close the gap, which we clearly did over here, and then the next target is to get above this high. So in other words, sell climax, closing gaps, target is to get above the logical breakout. Why? Because weak bears will put a stop 1 tick above this high, and normally in a weak channel or a trading range they get stopped out. Look what happened, 49.75, and this high was 49.50. Bears were able to defend that stop. It seems minor, but it's very important. And look what happened after that. Bears defended it. And then look, bulls who bought this close had one chance to get out at break even. Here, this high was 48.75. This close was 48.50. And then look, 48.50. 48.50 was this high. 48.50, 48.50, 48.50. Bears gave up. And it kind of cascaded. It started with the bulls not being able to get out at the high. And the reason I'm saying, put yourself in that situation. Let's say, you bought this close or this close, doesn't matter. Let's say you bought it above here, and your target is the high of 59 even, because you think, okay, we're probably going to go one tick above, so we'll probably at a minimum get to 59.25, and I'll get out of break. I'll get out. My target will get filled. Well, what are you going to do at 59 even when it starts to hesitate and turn down? You're going to get nervous because you know one thing. The odds are we would go above this. Reason why is low probability bears will sell a few ticks shy of this high. They'll sell in here. They'll sell this close. They'll sell this high. Put their stop one tick above and go for a new low of the day. Well, if you're risking 2 ticks to make 6 or 7 points, obviously it's a low probability bet. Well, bulls are going to get worried, saying, gee, they have to protect their profit. They know there is the possibility, that 30-20% possibility, that we get a double top and a new low. So that's kind of the same thing here with this high and these closes. So alright, that's all I've got for today. Monthly chart not looking so great. It's forcing traders to buy in the middle of the range. Crude oil. You can see big up, big down. So here was pretty much the open. We started turning down, got 3 bear bars. At some point you can look to sell. And then, strong enough breakout, second leg down. Look what happened though. Disappointment and a new low. Disappointment, new low. We're channeling down. So not a lot to say. Alright, that's all the time I have. Hope everyone has a good weekend.